Welcome. Let's dive right into this explainer. Today, we're tearing down the old ways of doing things and looking at how to truly modernize your small business finances. We're drawing directly from expert financial tech sources to build you a better system. Look, if you're still relying on a messy web of manual spreadsheets, printing out invoices, and just relying on gut feelings to run your business, you're going to want to pay close attention. We're breaking down the exact digital invoicing, accounting, and cash flow management tools that top SMEs are using right now to streamline everything.
If the gap between money you've actually earned and the cash actually sitting in your bank account is keeping you up at night, trust me, you are absolutely not alone. According to the experts at Shuttle Global, late payments are literally a multi-billion-dollar drain on the small business economy. The difference between a business that thrives and one that goes under, often it has nothing to do with sales. It's simply about how fast you can turn an invoice into actual spendable cash.
Okay, here's our roadmap to get you out of the manual spreadsheet era. We'll hit the SME cash flow problem, move into core accounting and compliance, tackle automated invoicing, look at forecasting, and wrap up with choosing your tech stack. Let's get right to it.
Section 1. The SME cash flow problem. Let's pinpoint exactly what's holding small businesses back from healthy operations.
So here's the harsh reality. You can have a thriving, highly profitable business on paper, but still feel massive, crushing pressure when rent, payroll, and your supplier bills are due today, but your client's payment is delayed. That is the SME cash flow problem in a nutshell. You sent the invoice, the client says, "Oh, the check is in the mail," but your bills don't care. They don't wait. Bridging that anxious gap is exactly what a modern financial tech stack is built to do.
Moving into Section 2, Core Accounting and Compliance. This is your foundational layer, where we have to deal with the unavoidable reality of regulations.
Now this is absolutely crucial. We are looking at a new normal where digital modernization isn't just a nice-to-have, it's a strict legal mandate for a lot of small businesses. Take the UK's Making Tax Digital initiative, for example, which requires compliance by April 2026. This isn't just about making your life easier anymore. Governments all over the world are killing off paper and forcing businesses into the digital age.
To avoid nasty penalties and stay compliant, governments are increasingly expecting you to handle these 3 core activities digitally. You can't just hand a shoebox full of crumpled receipts to your accountant once a year anymore. You absolutely need digital record keeping, you've got to provide quarterly updates to avoid that huge yearly scramble, and you have to push all of this through officially recognized accounting software. So what are your options for that bedrock software? Well, as we can see here, if you're a freelancer, Wave is an incredible starting point because its core product is completely free. FreshBooks is also fantastic if you run a service-based business and need time tracking. But if you're scaling up and dealing with inventory, you'll probably want to step up to an all-in-one powerhouse like QuickBooks Online or Xero. And for the really advanced users with heavy inventory needs, Sage 50 offers that premium depth. Whatever you pick here is going to form the absolute foundation of your whole system.
All right, Section 3, Automated Invoicing and Receivables. Foundation is set, now let's talk about the plumbing, getting cash through your door faster.
I absolutely love asking this question because the secret isn't constantly nagging your clients. It's actually about shifting your strategy from chasing payments to just offering totally frictionless payment choices. The difference between a painful 45-day wait and a breezy 14-day turnaround usually comes down to your software, not your customer being malicious. Make it incredibly easy for them, and I promise you, they will pay faster.
This is where accounts receivable automation comes in, and tools like Invoice or Shuttle are total game changers here. By using embedded links, they let customers pay directly from the invoice itself. Imagine sending an invoice that automatically fires off a polite follow-up email if it's not paid in a week, or an invoice with a giant Pay Now button, so your client can just tap Apple Pay, Google Pay, or a credit card in one click. You're removing literally every ounce of friction that makes clients procrastinate.
Now, if you're taking the more advanced route and hooking your e-invoicing up to a larger ERP system, you'll want to follow these 5 steps from TrueCommerce to avoid a massive headache. First, you've got to assess software compatibility. Then, define exactly what you want to achieve, like automating 3-way matching. Crucially, involve your IT, finance, and procurement teams from day one, and for the love of all things holy, do some rigorous testing on the data sync before you hit go live.
Moving right along to Section 4, Forecasting Your Financial Future. Your cash is flowing, so let's set up the radar system for your tech stack.
You absolutely need to grasp this concept because it empowers you to actively model out what your next 3 years could look like depending on the decisions you make. This is exactly what a bank or an investor wants to see. A basic tracker just shows money in, money out. But a three-way projection, it wires your profit and loss, your balance sheet, and your cash flow all together. So if you change one assumption, like say hiring a new employee, the whole model dynamically updates so you can see the exact impact on your runway.
Depending on how your brain works, there's a specialized tool out there for you. Gcashflow is incredible because it lives right inside Google Sheets, so you get that familiar spreadsheet feel for deep three-way projections. If you just want hands-off, highly visual tracking of the next few months, Float is awesome because it syncs straight with Xero or QuickBooks. And if you're standing in front of a board of directors and need gorgeous presentation-ready reports, Fathom is your go-to.
Finally, Section 5, choosing your tech stack. Let's talk about the big picture architecture of how we actually wire this whole thing together.
This is the million-dollar strategic question every growing business has to answer. Do you buy one massive, all-in-one system where everything lives happily under one roof, or do you handpick the absolute best specialized tool for invoicing, the best one for forecasting, the best for accounting, and stitch them all together yourself?
It's a really interesting contrast, and as Archway notes, it comes down to priorities. The integrated model gives you that single data warehouse. It's simpler, entry is automated, and you have exactly one support team to yell out when things break. But the best-of-breed model? That gives you total flexibility. Your inventory folks get the best inventory software, your finance folks get the best forecasting software. The big catch is that you are on the hook to make sure all those different tools actually talk to each other. Regardless of which path you take, you have got to avoid these common pitfalls. A messy, poorly implemented tech stack is just going to drain your time. Please do not create data silos where your sales software refuses to talk to your accounting software. Don't forget to plan for how you'll scale in a year. And honestly, the biggest mistake, skipping employee training. If you don't train them, your team will just abandon the shiny new software and go right back to their comfortable, error-prone spreadsheets. I want to leave you with this provocative thought as you take your immediate next steps to modernize your setup. Are you just sitting there reacting to money moving in and out, or are you actually architecting a system that accelerates your receivables, keeps the government happy, and maps out your future growth? Thank you so much for joining me for this explainer. Now go out there and build a smarter business.